Here's the NASDAQ chart. I assume the Qs are obviously following this. And we had a decent pullback here, almost the 50% pullback on this last pullback. A decent amount of the bullishness has been taken out of this. We should see some consolidation in this zone here. I would say that a decent downside target, this is the daily. I want to take you back to just a second, weekly. Downside target on this oscillation should be around 7394 once they start to pull back. As far as the NASDAQ, as far as clear indicators of what's going on, all we got really here is this just obviously a heavy resistance area. This should get a bit more of a pullback before it actually shoots up more. Obviously this 7695 area is going to be important. Anyways, actually the clearer chart's the S&P 500. Let me show you that really quickly. For the S&P, what's clear here is that we have this obvious resistance line here, and it pulled back at that resistance line. Pretty much this 125 retracements, 125% of this basic trend here, is going to be our next resistance level. Like you should see a reversal up that level, at least down to this area here, which is the 2,959. So basically that 125 is coming up right around the 3,000 mark on the S&P. That's why I look for all the markets to pull back, and we're very close to, actually the S&P is really close to that right now. So that's the one good thing that you should see in a bit of, you actually kind of saw it already, and they had the pullback, so they may exceed that a little bit because they always like to exceed the strong points, 3,030, something like that. And then you should see this pullback probably down to at least this. Anyways, for the S&P, you're not really trading the S&P, but that's where you should see the pullback, right about where the market's at now, or another 30 points up or something like that on the S&P. That's about all I got for these charts. What I will show you is that there was some super clear signals. I'll show you the super clear signals on the markets that did come through. For the S&P, I'm going to show you on this stochastic here. This is actually the weekly bars in this S&P, but there's some super clear signals here, and this will filter down to the 4-hour too. I use this stochastic. You can use a normal stochastic of 50, D period 30, slowing of 40 if you want to build one of these. And I use these 90-10 levels and the 80-20 levels, but mostly 90-10 are the blue lines. So you can see here, the idea is they're in hard trending when the stochastic's up above this 90 level. And as soon as it pulls down below that 90 level, right about down to the 80, you have your pullbacks. This pullback was already in process pretty much, but it's obvious because it fell quickly, but it followed through quickly thereafter. Here's another example here when the momentum in the market pulled back, and after that you get the hard pullback follow through. And if we look at this on the, I think in the daily, it'll still show it. It happens again and again, but just trying to show you when it comes in early. It starts here and then it falls through hard. Here it started again. These fall so fast, like you said, on the downside, it's hard to see much early anticipation, but the follow through is there. After you had this rise above the 50, above the 90, you've got the full momentum of the markets moving. As soon as that drops back, you're going to have the follow through down to, usually it's down to this 250. As you can see, they cut the 250 a bunch of times here, bounced off it. I'll leave it at that. It's much easier to be following a system, knowing what's going to happen and when it's safe to enter the market, rather than trying to make up something when the market's kind of floating. Obviously news could blow this thing up higher, but we have some good return lines. It should do some more oscillation around this level, and certainly, anyways, I'll leave it at that. Here's the 4-hour, and on the 4-hour we're not looking super bullish here. Okay, talk to you later.